Alright, what's going on guys? Edward here, back with another video. This time this is part 2 of market structure. I have created a series of market structure videos so you guys can understand better, okay, different things. If you haven't seen the first video, I recommend you go in here at the top. I'm going to actually link the actual video and a playlist that I have created also for you based on smart money concept if you're interested in learning that. It's basically like a free course in there. A lot of videos, about 49 so far, about 49 to 50 videos in there based on smart money concept. I recommend you watching. So let's go ahead and continue with this thing. On the previous video I was explaining about fake change of characters. Okay, for example, if the market is pushing up, we have an impulse and a correction, impulse, correction, impulse. We happen sometimes to happen a big like movement to the downside right here, apparently creating a change of character, but it ends up that is actually the market actually continues going bullish, right? So it's giving me this boss right here in this area and this change of character right here, right? But in reality this is not a change of character, it's a fake change of character, or it is just known as a sweep or just liquidity grab. Okay, it's a fake out, inducing people even to go selling, right, when in reality the price is pushing up. Smart money concept traders are going to be looking for maybe an order block somewhere there so you can go for the sale, aiming maybe this low, but in reality the market will just go ahead and now create another boss to the upside. These things happen a lot. All right, now in this example that I wanted to show you so far, we have this low, like this is my last low that has been created right there, and like that. All right, so let's see what the market is actually going to do from here. We do have a clean break. Right, now pay attention to this, because most students, most traders, let's say you mark that as a boss, right? You say that that is a break of instruction. And smart money traders will mark this high as the change of character, right? That's where the change of character would happen in reality, right? If the price actually happened to break this high. Like if the market all of a sudden does this, boom, breaks, we normally look for a breakup, for an order block formation somewhere here, right, with all of our confluences to then go buy, right? That's normally what we expect, right? So let's see what's happening. Right, boom, you go there and you see that you have now your potential change of character, and you're like, holy cow, yeah, I have my change of character there. Let me see if I can actually mark up this little zone right here as my order block, because I don't see anything else here. Maybe here there is a POI, maybe this POI zone right there. I want to check it out to see if it's going to react. Right, no, it did not react to that one, so it means that maybe it's going to be reaching the bottom one. So you go there and you place your buy position, let's say right there, and your stop here, and your take profit there, because now you're looking definitely for buys, right? So let's see what's going to happen. So far it's not mitigating anything, and boom, like, and you are like, what is going on here? Why did I get stopped out? I don't get it. The market gave me the change of character right there, right? And my potential zone was actually right here, right? What happened? This is a fake change of character, guys. Okay, these type of fake outs, they do happen a lot. This is just known as a sweep, liquidity grab, whatever you want to call it. They have a lot of names. It's just money. The market is just sweeping this highs out before now taking the previous lows, which is somewhere here. Now this is my breakup structure. Alright, so this was just simply a sweep right there, a liquidity taken. Right, so instead, now from there the market can do whatever it wants. If it's going to go up or down, pretty much the market continue. Let's see from here, boom, it took this high. Yeah, we can say that we have our breakup structure here in this area. Although, yeah, we definitely have it in there. So it's kind of weird, but you can mark this side now right here as the change of direction, change of character right here. Alright, but you see that right here, this type of traps, they will happen. Okay, this is just manipulation, something like this. The market will do this type of sweeps most of the times. Okay, don't get me wrong, not every single time this is gonna be a sweep, like for you to be scared, like, oh my god, now every time I see a change of character, now this is gonna make me more scared, I'm not gonna be making my positions. No, you shouldn't be trading scared. If you're scared and like overall, you shouldn't be trading, right? This is something that you have to manage. You have to manage your emotions. You have to know how to manage your emotions. You have to know how to take the risk, when to take the risk, right? So if you have your plan, if your plan is still, you think that you're seeing the change of character, you spotted your change of direction right there, right? Let's say you have another potential zone right here, right? So you're actually watching this too. Which of these two will play out? The first one did not play out, maybe stop you out on that one. Now you're getting ready to enter into this one. Let's say, I don't know, let's say you spotted, hey, this is a 1 hour setup, right? What I recommend you is go in lower time frame. Okay, look for more confirmations in lower time frame. Look for a buzz and a change of character like that, like in lower time frame, so you can maybe go and catch the sell. If you don't see that little confirmation, that reaction happening in lower time frame, then it means that maybe you don't have to place a position. If the market just end up breaking to the upside, you did not make your position because you did not see any buzz or change of character in lower time frame, right? You did not spot any confirmation in lower time frame for you to enter on this one, so you let it go. The same thing will be with this one. If you want to maybe be more careful, more patient, then look for entries and look for more reaction, more rejections happening in lower time frames. Okay, let's say you spotted this on a 50-minute time frame, then go to the 1 minute. Go to the 1 minute. Once the market starts getting into that zone, your job is to look for some sort of strong reaction, right? And if you can spot maybe a second auto block after spotting the buzz and change of character in lower time frame, even better, right? If you don't see anything of that, then you don't enter, right? That way you're being more conservative and not that aggressive, because there's a lot of aggressive traders that as soon as they see the change of character, they are immediately placing their sell limit right here and another sell limit right here, right? Just like that, right? It's very risky to do that if you don't see, first of all, if you don't see liquidity. You normally want to see liquidity form, right? If you see a double top, that's beautiful, because you know that double tops, there's a lot of retail traders trying to get in those double tops to look for sales, right? So the market makers will definitely wipe these guys out, right, to then go sell. So your opportunity to go definitely on the sell is actually right there, right? Still, we don't know, guys. We don't know where the markets are going to go anyways. No matter what setup you have, no matter what strategy you are trying to follow, we will never know exactly where it's going to go. So this won't work 100% of the times. This fake outs right here, they won't happen all the time. They won't happen all the time. Like the days that happen the most, this type of fake outs, even like that, you can have a fake change of character and then another inducement right here to the upside, and then the market will later actually end up crashing. And you're gonna be like, what the hell just happened right here? Well, most likely news. All right, NFP, CPI report, Jerome Powell is speaking, some sort of fundamental news, right? It will be affecting, and they do affect a lot the market. It costs a lot of things, a lot of volatility in the markets. Normally they get very, very choppy, very indecisive. So you have to understand that when you see a formation that it doesn't make sense, most likely there's something happened there. Maybe an economic event, something is happening that is affecting the actual direction. Okay, understand that. Don't be blowing your mind like saying that, but my God, I don't understand this. I had a chuck here, but then the price break is was supposed to continue pushing up. No, the market is not supposed to do anything, right? We don't control the markets. If there is some economic events, fundamentals, news, as I mentioned, government speaking, Jerome Powell, the Feds, the markets will get very, very choppy like that, and they will do a lot of manipulation. All right, so you have to be ready for that. Am I blowing my account with this single trade? No. That's the one thing that you have to be sure that you're not going to be blowing your account with one single trade or even two trades right here. Right? Please understand that. Again, this is the second part. I'm going to continue with this series explaining market structure. I hope you like it. I'm trying to make these videos very short so you can get it clear. If it's necessary, maybe you watch this same video a couple of times to understand. But that's pretty much it for this video. If you're new on the channel, please subscribe. Make sure to go on the list above right here on this little circle. I'm gonna actually leave you the previous videos that I have posted based on this. This is the part 2, and part 3 will be coming soon. So I'll see you in the next one.